The Reserve Bank in New Zealand has proposed introducing debt-to-income ratios. So what are they, and what does this mean for you? So a debt-to-income ratio is just another tool by the Reserve Bank to try and restrict risky lending. So basically, in New Zealand, banks will only be able to lend 20% of their total lending outside of these restrictions. So now, just to be clear, banks already do monitor this, and at times they have had debt-to-income ratios in place, even just for certain parts of the country where they had concerns. The other thing banks do is test people's servicing, which is basically checking how much they earn, how much they spend, and if they can afford the home loan at higher rates than what are currently available. This will all still exist. The debt-to-income ratio will just be an additional test on top of this when applying for a home loan. So what does this mean for you? So there's a good chance if you just own your home or want to buy a home that it may not impact you much at all. The ratio available for an owner-occupier is 6 to 1. So this basically means if you have a family income of $150,000, the maximum lending you can do is $900,000. So in the current environment, with interest rates being a bit higher, this test is unlikely to have any impact on you at all. But if we had rates that drop back to lows like we saw in 2021, then this test could restrict what you were able to lend. In my opinion, people that want to buy investment properties are more likely to be impacted. So the ratio is 7 to 1 for investment properties, but new builds are excluded. So in that same example, if you had $150,000 of family income, and say the new rental property would have rent of $30,000, then you have total income of $180,000 a year. 7 times this is 1.26 million. And say you already have a $700,000 home loan, this means you've got $560,000 of lending available. But this doesn't factor in the fact you may have student loans, vehicle loans, credit cards, afterpay, store loans, all those things are taken into account. If you want to have a chat on any of this, feel free to get in touch.